Hello, this is Right Side Trader. Today is July 17th, 2026, and this is my weekly market review. Where I'm reviewing the Russell 2000, that's IWM, on a quarterly chart, monthly chart, weekly chart, and a daily chart. This is all for educational purposes only, no trade recommendation, because as we all know, trading is risky. You can lose money at trading, so please check with your financial advisor. Please check with your significant other, and make sure trading is something that is suitable for you. All right, let's jump over here to these charts and see what we see. Maximize, 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 resize. What we see here on this quarterly chart is a red candle. This is the first month of the quarter, so we are seeing red, and we haven't had a red candle in quite some time. The Russell has been really hot at this time, so and it's not hadn't got that big yet, so it's still hanging out here at the top, still within its little $10 range. Well, I say little $10 range, in a $10 range, which is not bad, But again, pay attention to your trading plans and your trading strategies at this time. Don't let this thing roll over on you too much. Let's go ahead and go down to our monthly chart and see what we see there. On this monthly chart, zoom in here. On this monthly chart, the main thing that we see here, we are still above our 9-10 moving average. That's this blue line right here. So technically, we are still in a bull market. We are still above our pivot. These are quarterly pivots, and all the pivots are kind of wide because we have been making some pretty big moves on the Russell here recently. But we are forming a bearish harami. But again, we're early. We're halfway through the month. That's what we're seeing. That's why, again, get where you are paying attention to your trading plans and your trading strategy and trade accordingly. Don't let this thing slip down too much on you at this time. We have been in a pretty strong market here so far this year. Don't give back too much of those profits at this time. That's all I can say at this time. But let's go ahead and go down to our weekly chart and see what we see here. On this weekly chart, let me zoom in here. On this weekly chart, what we see here, let's kind of look at what's been going on. First of all, it started off making all-time highs, then making all-time highs again. Then we formed, by the end of that week where it made that all-time high, it had formed a bearish harami and gotten pretty good confirmation of it too with this candle right here. And now we've gotten some follow-through with this candle right here. But we're getting dojis and we are staying above pivot. We get below pivot and we do come back above pivot for the month on these monthly pivots and all. So that's a good sign. That's letting you know that they are maybe taking a little bit profit, but they're not getting completely out of their positions, the big guys and all. And we got this green candle up here, and this whole thing had that pushed up pretty good. And these tails over here, these bulls haven't left this thing yet. And also it's hitting into this whole demand candle here and all, and holding this market up. But don't let it slip on you too much. Do what you need to do in order to protect your money, because we are at this time in a little bit of a downward slide. Although this time we got a little bit higher low, but we did get lower highs. So be careful, be careful, be careful. That's all I really want to say here about this weekly chart at this time. Let's go ahead and go down to this daily noise and wrap this on up. On this daily noise, we can see how this thing had been sliding down and all here. Let me get this here. Why my thing don't want to work? Well, keep clicking on how I've been sliding down. Come last week. Let me see. This was Friday here. So Friday we did have a piercing pattern, showing us signs of bearish in the market, and we did get confirmation of it. But come that next day, we ended up getting a red candle pop back up, but we never broke the high. We never broke that high. And then come on expiration day, that's what this thing here represents. Those guys who had sold above this market want to make sure they got their money. That's what I say. I don't know what they were doing. That's my whole big thing. Sell, and all. But I do buy quite a bit though too. So probably did sell it. Well, after always, when you buy, you always got to sell. But that's that. I'm going to start going crazy. But again, as we can see here on the Russell, though, they pulled this thing back pretty good. and all. So again, I wouldn't get too concerned. We didn't break this bottom down here. We didn't break 290. We stayed within our $10 range. 290 to 300 is where I would be looking at right at this time. And also everything really looks pretty good. And but come next week, look like with the Russell, don't know if this thing is going to gap up above pivot, but right now it looks like it might open below pivot. And if that happens, maybe this whole slide thing might continue and all. And because again, we haven't broken this high up here, and we haven't broken 300 yet. So again, be careful, be careful, be careful. And that's all I really have to share at this time. This is Right Side Trader. Hope you guys had a great week. Hope you guys have a great weekend, and I'll talk to you next week. Have a good one. Bye. Happy birthday, Jayla.